Hello everyone. In today's video, we shall talk about HRA calculation and tax exemption rules. We shall see how HRA deductions can be calculated for salaried and non-salaried individuals. Now, if you are a salaried employee, then you can claim HRA under Section 1013A. Out of the below mentioned amounts, whichever is the least can be claimed for the HRA. Now, if we consider the figures, the first thing to be considered is the actual HRA that's listed on your payslip. So the second one is 50% of your basic if you are in a metropolitan city, either Delhi, Calcutta, Chennai or Bombay. Plus the day earners allowance if you are a government employee, or 40% of the basic if you reside in a non-metropolitan city. And the third amount to be considered is the actual rent that you pay minus 10% of your basic pay, plus day earners allowance if you are a government employee. Now, out of these three figures, whichever is the least would be considered to be claimed for HRA. Say for example, if your salary is 60,000 rupees per month, your basic pay is 20,000 rupees per month, then the HRA is 12,000, and if you pay a rent of 15,000 rupees a month. Now, taking this as an example, the actual HRA is already given to us, which is 12,000 rupees. 50% of the basic pay. Now, say for example, if you are residing in a metropolitan city, then 50% of 20,000 is 10,000. Then the last amount, the rent minus 10% of the basic pay. Rent is 15,000 minus 10% of your basic pay is 2,000 rupees. 10% of 20,000 is 2,000 rupees. So that will be 13,000. So out of the 12,000 actual HRA, 10,000, 50% of the basic pay, 13,000 rent minus 10% of the basic pay. The least is 10,000, which is 50% of the basic pay. Now, since that is for 1 month, we just need to multiply it with 12. So that will be 1,20,000 for the entire year that could be claimed for HRA. And now, if you're salaried but do not receive any HRA from the employer, or if you're self-employed or non-salaried, even then HRA can be claimed under Section 80GG. Now, coming to the amount that could be claimed, the minimum of the below mentioned amounts could be claimed for HRA. So the first amount would be rent minus 10% of the income. The second amount is 25% of the income. Third amount is 5,000 rupees per month. Whichever is the least will be considered. The maximum that could be claimed could be only 60,000 rupees per year. Now you can claim HRA under 80GG only if you or your spouse do not own a house, a current place where you reside or where you work. Now, as proofs, rental agreement or rent receipts can be submitted to the employer if you are claiming it under Section 1013A. Or if you're claiming it under 80GG, then you may have to keep them ready. So whenever the income tax department asks you for them, then you may have to submit it to them. And most important, if your annual rent exceeds 1 lakh rupees, then the landlord's PAN number is mandatory. If the landlord doesn't have a PAN card, he can provide self-declaration. Well, that's all guys about house rent allowance. Well, I hope this video was useful. Hope you like it. Hit the like button, do comment and subscribe if you have not yet. This is Yasu signing off.